Hi friends, welcome to another video in this prediction video series. Two advanced pattern formations have developed over the weekend. One is on Tata Chemicals and the second one is on Bharat Electronics. For those who are wondering what these advanced patterns are, I will put out a video exclusively on what an advanced pattern is, what are the different types of advanced patterns, which are its important levels, and how to trade them pretty soon. For the time being, let's focus on this chart and the advanced pattern that has formed on Tata Chemicals. There is a bad pattern on Tata Chemicals, and let me show you how this pattern got formed on Tata Chemicals. This is our first leg, the AB leg, BC leg, and the termination of this pattern at the 886 level. So we now identified a pattern on this stock. Next, let's see if we have any references to support our assumption. The most common references are simple ABCD patterns, Fibonacci confluences, RSI divergences, candlestick behavior at termination points, etc. Always remember, if we have two or more references supporting our assumption, the trade can be considered good enough to execute. Okay. So let's now pick each of the reference that I have mentioned before and see if those references support our assumption to go along on Tata Chemicals. The first one is ABCD pattern. I want you to focus on this zone right here. Only focus on this zone right here. This is our down move. This is our retracement, and this is possibly our CD leg. As you could see here, the CD leg terminates around this zone, and this is the zone where exactly prices pushed into and bounced back. So the ABCD pattern is a decent enough reference for us. The second one, Fibonacci confluence. Let's see if we can find any confluence around this zone. As you could see here, once again there is a Fibonacci confluence at this zone, this level. There are two Fibonacci levels meeting together here, and almost here. So once again we can consider this zone as an important area. Next is RSI divergence. For our RSI divergence, I want you to focus on this zone here. Look at let me drop down to a line chart. You could see prices pushing lower, but at the same time RSI is diverging, which could possibly suggest that downward pressure might be subsiding. This RSI divergence possibly suggests to us this downward pressure might be subsiding. So that is another reference. The final one is a bounce of this support level. The prices pushed lower and closed above the support level and made a higher high closing. So with our pattern in place and the references to support that pattern, let's now see where can we place our targets and our stop loss. Always remember, in advanced patterns, 38.2 and 61.8 levels are the most important ones. On advanced patterns, these are the levels. 38.2 and 61.8 are the levels which we are expecting the prices to head to. We can spot those levels by using the Fibonacci retracement tool. This is the Fibonacci retracement tool, and this is our 38.2 level, which will be our first target, and the 61.8 level, which would be our second targets. So let's now grab our target placement tool. Assuming the markets open at this point in the next trading session, we can place our trade orders here. Our first target would be this, with a stop loss just below this point, and our second targets would be this, with a stop loss once again just below this zone right here. Okay, so let's see how this trade plays out in the next week. Bharat Electronics is our second buy. We have a Gartley pattern here on BEL. Bharat Electronics, after making this lower low, lower high pattern, is chopping around in this zone, or is consolidating within this zone. This is where we can take advantage by trading advanced patterns. And when we look here, we can spot a Gartley pattern on this chart. Let me draw the Gartley pattern for you. It looks like this. This is the first leg. This is the A to B leg, B to C, and the termination possibly here. $127. This is our 127. So yes, this is our termination on the Gartley pattern for this chart. So as mentioned before, once we have our pattern, we need few references to support our assumption to go long on this trade. So let's see if we can find any of the common references to support our trade. As usual, the first one is ABCD pattern, a very common form of pattern which traders use to trade worldwide. So please focus on this area right here, on this move right here. This is our initial down leg, the retracement, and let's see our CD leg terminates right at the termination point of the pattern, which is a good enough reference for us. Sure enough, it is a good enough reference that people might be willing to buy from that point. Okay, so that is our first reference. Now let's see if we can have any Fibonacci confluence. Fibonacci confluence is nothing but meeting of two Fibonacci levels at one place. Okay, so can we find any Fibonacci confluence? There is almost a Fibonacci confluence at this point. Almost. This point here. It's not a perfect confluence, but almost. At the 1.272 and 1.414 kind of confluences at this point. And do we have an RSI divergence now? Let's see if we have an RSI divergence. Yes, we do have an RSI divergence on this low and this low. Let's drop down to a line chart. Look at this low When this low was made, this was the RSI corresponding, and when this low was made, this was the corresponding RSI, which shows there is a clear divergence. And here it looks like this. On the chart it looks like this, and on RSI divergence it looks like this. So it suggests a clear divergence and a possible loss in momentum of the sellers. Okay, and finally, as you could see here, the prices have bounced off the support level almost. It didn't pierce through, but still it almost tested this support level and bounced off this level right here. So that is also a decent enough, not perfect, but decent enough reference for our assumption. So we have got this ABCD pattern which lines perfectly with the termination point on the Gartley pattern, a Fibonacci confluence which almost, it's not perfect, but almost lines up with the termination point, a decent enough RSI divergence. These are the lower lows, and this is the divergence on the RSI, and a bounce from a support. That can't be regarded as a very good reference because it didn't pierce through, but still it almost tested the support level and bounced off it. So it's decent enough to be considered as a opportunity or a reference. So we now have our pattern in place and our references lines up pretty decent with our assumption to go along on Bharat Electronics. Now let's see where can we take our targets. As I mentioned earlier, in an advanced pattern, 38.2 and 61.8 are the two major levels where we want to see the prices heading to. So let's mark our 38.2 as our first target and 61.8 as our second target. So this should probably be our first target, and this probably our second target. Okay, let's grab our tool. Market opened here, so first target would be this, with a stop loss just below this major support level, and our second target should be this, with stop loss just below the support level. So this is how our setup looks like. Now let's see how this trade plays out on the next week.